Hello and welcome to our market alert video for today, which is March 17, 2023. But first, I want to dive into this what has been of great consternation this week, and that is the banking system, the Federal Reserve, rising interest rates, inflation, all those things, and kind of put things a little bit into perspective as we see it. The first thing is the banking system, and given this Silicon Valley Bank and of course Credit Suisse in Europe, it can get pretty scary, and we start to think, is this 2008 all over again? Are we going to see a massive banking crisis, and depositors are going to lose their money? And certainly those are scary thoughts. The Federal Reserve and the Treasury under Janet Yellen, both, and Jerome Powell, the chairman of the Federal Reserve, both last week came out and said that the depositors are going to be taken care of. Their deposits are not at risk, and that they didn't say this in so many words, but essentially they will print as many trillions of dollars as it takes to support the banking system. Now, why would they do that? Well, number one, they saw what happened in 2008, and so they want to get ahead of that and make sure that people know that they're on it. What happened in 2008 was that a lot of it came as a surprise. Lehman was a gigantic shock and a surprise to everyone, and it almost took down the entire economy with it. The Federal Reserve today knows, they've seen that movie, they've seen the 2008 movie, and they are already anticipating these kind of things, given that they're the ones that are raising interest rates. The other thing also is that they saw what needed to be done in 2008, so they don't have to reinvent the wheel. They can do it in 2023 without having to think a lot about it. They know what worked back then to shore up the system, and they can do that this time around also. The thing also that we have to remember is that the Federal Reserve is an institution, but it's people, and people have egos. And we're very sure that the Federal Reserve, the people on the Federal Reserve right now, do not want to be remembered as the Federal Reserve that destroyed the U.S. banking system, collapsed the economy, and caused the next Great Depression. So they're going to do everything it takes, and they have the power to do so. They have the printing press. They can print trillions of dollars. We've seen them do it already, and if needed, to make sure that depositors don't lose their money. So the banking system, in our view, is not the big risk here. And specifically, if you look at Silicon Valley Bank, that was an example of just terrible management. They mismanaged their money horribly, and that is not necessarily a reflection of the entire banking system doing the same thing. So for a lot of those reasons, while the market is very concerned about it, and you may be as well, we think the banking system will be shored up by the government and by the Federal Reserve. So the other thing is that if you've been watching these videos, then you know that we explained about a month ago how inflation is calculated and why we thought that inflation would come down this month and be around 6%, and sure enough, it came out at 6%. And also why we think that inflation by the end of June will be under 4%. And if you look at the mathematics of how inflation is calculated, you'll find that it's a very compelling case that inflation is going to keep coming down over the next 3 months. So that being the case, inflation, which is the big scary thing that we've been grappling with, looks like it's going to trend downward over the next 3 months. And we think investors will view that positively as we head into these next 3 months. So if it's not the banking system collapsing and it's not inflation, pardon me, then what is it? What could cause the big market crash? Well, it would be something that we have not anticipated. So what is on that list? Well, we don't know because it's not anticipated, but what is on the list that could be concerning would be the consumer shutting down. Right now, the jobs market remains strong, so it doesn't appear that that's going to be a dramatic change, but it could be. We could see the economy come to a grinding halt suddenly. Again, with the consumer having jobs, that seems to be an unlikely event, but it could happen. So overall, the risks to a big market crash right now, unless something comes up that we haven't thought about already, look kind of small versus the possibility that the market could go up between now and the end of the year. So we remain cautiously bullish, with the caveat that something new and dramatic that comes along that had not been anticipated already causes the whole thing to be upside down, in which case then, yeah, it could go down dramatically from here. That's why in our firm, we believe that you plan for the worst and you hope for the best, okay, rather than planning for the best and hoping the worst doesn't happen. So if you're planning for the worst, what would you do? In our view, you would have a strategy to protect your retirement. That seems pretty logical to us. Have a strategy that if the market goes down dramatically, you get out and try to mitigate the losses so that you can live to fight another day. And we don't believe that staying in and experiencing massive losses is the way to financial security, even though it may come back eventually. In the meantime, you're trying to live on your money or you're trying to retire, and both of those things could be impacted negatively. So that's why we have our invest and protect strategy ready to be enacted should we need it. And as you guys know, we actually sold in April of last year and stayed out for pretty much the entire year after that, and out of bonds as well, because as the Fed raises interest rates, bonds tend not to do very well at all. So for those reasons, we have that strategy to protect our clients. Now, if you don't have this strategy, then I would recommend that you visit with one of our retirement planners. You can do so by clicking on the link and scheduling a time to visit with one of our retirement planners who'll work with you to build your retirement plan and hopefully facilitate your retirement, which we call your second childhood, without parental supervision. So to recap, yes, the banking system is scary right now, but we think the Fed and the government will shore that up. Inflation, we think, will generally trend down over the next few months, and so we think that's going to kind of be a positive thing, not a negative. So what could cause everything to go wrong? A surprise event that we don't know about now, and since it's a surprise, I don't know. But have a plan to protect yourself in case it does happen. Our website, again, is rpoa.com. Thanks for watching this video. Share it with as many people as you would like. We want to help as many people as we can, and we'll talk soon.